How to reduce taxes for high income earners. I love this one because this is the biggest problem that I solve. So many of you think, well, if I need more money, I'm going to get another job or I'm going to get a raise and one job's going to create more money. That isn't going to work just having W-2 income. No rental property, no side hustle, no other income almost leaves you dead in the water. So how do you do it? You start balancing employee life and what I call corporate life. And to understand corporate life, go grab 2 tickets to my Millionaire Intensive. I do it once a month, so grab them in the link below. When you come to the Millionaire Intensive, you're going to understand our version of corporate life. And then lastly, how do you couple the investing strategies so it actually creates a depreciation schedule? Because just investing in only stock market related stuff produces huge capital gains, no depreciation schedule. So again, I call the reduction of taxes in a family's life a trifecta. How you make money into what company, how you activate all the deductions, and then how you invest with depreciation schedules. So let's begin. So again, how do you shift from just employee life to corporate life? You got to come to my Millionaire Intensive. I made up the word corporate life, and I'm not talking about going to work for a big corporation. So inside the Millionaire Intensive, I talk about corporate life, meaning when you make money, you make it inside of a company, right? It's either an LLC, a limited partnership, S Corp, C Corp. So the money comes into a company. That allows you to activate 81,000 pages of tax code. And then you start doing all your deductions. So the activity I take my clients through is you look at all your personal expenses and you start moving them into which company for which deduction, so you reduce your overall personal W-2, like employee income, and your own employee, your personal expenses. Because what you pay for isn't deductible, what your companies pay for is a deduction. So instead of an expense, you have a deduction. Big, big difference. For those of you who are super serious, you're going to grow from 1 company to 2 to 3 in a very, very short period of time. Just to run integrated wealth systems, it takes 4 companies to do that, right? There's an event side, there's a coaching side, there's an intellectual property management side, and then there's the actual sales and marketing side. So all of those collectively together operate in behalf of the better tax strategy. A lot of you, you're making all your money into one company. You're not spreading out those deductions or the income. And there's a different quality of income when you do that. So you've got to lean in and learn. If you're curious about it, make sure you call our office or get a gap session, right? Read the first 3 chapters, which we'll put in the link below, of our Millionaire Maker book. And once you understand the gap, we're going to actually tell you how you can reduce your taxes as you become a client. The big trifecta of this, which is the depreciation schedule, it's just surprising. The more and more I study corporate life, the deductions, and tax issues that a lot of people have, I call it overpaying tax and invisible pain. You're just used to it. You're used to overpaying, 10, 20, 30. I have clients paying hundreds of thousands of dollars in taxes because they just don't understand the dynamic of how this works. So when you invest for depreciating schedules, for example, I'm not going back to buy Chevron stock where I used to work or Shell or Exxon. I'm buying the actual capital working interest of a well. So gas and oil investing, real estate, water and mineral rights done right. A lot of people don't know how to do the tax plan on that. So I've had many CPAs say, well, you can't do any deductions on that. It's like, well, you can. You're just not doing them right. Aviation's a big one. Actually buying a gross weight vehicle of over 6,000 pounds is one. Having a 401k is one. There's a lot of places where you invest differently or you purchase differently to activate a bunch of the tax code. You're never going to go on vacations. You're only going on business trips. There's a lot in that category about making the money, keeping the money, and then how you invest it. Now, before we go on to the last topic, I want you to subscribe to my channel. I want you here 5 days a week. Click that notification button and share it with 10 other employee friends. I know a lot of you that are listening have employment income. I have employment income, but I'm a single mom making $36,000. I'm not making the millions. My companies make millions. I make $36,000 as a single mom. So a lot of you are paying yourself wrong if you do have companies. We see this a lot in the medical, chiropractic, that whole space. We find over and over and over, so many of you are overpaying yourself as an employee because you don't know how to pay the bills. The bills need to move to deductions. So let's go talk about that last point. How do you move your bills to deductions legally? Well, you get our tax help. So I have some of the best tax strategists in the world, and we do an activity that I called forecasting. It's not budgeting because I hate that word. It's like diets. No one does them. So I call it forecasting. So you're going to start spending your money into a variety of different companies based on what you're doing to yourself. Some of you have kids. You haven't hired your kids yet. Again, you're still taking vacations. You aren't allocating into wealth accounts. without the taxation. So for example, let's just say you have a company and you've learned how to make $1 million and it's a S Corp. Why don't you have a management company? Why aren't you paying yourself intellectual property fees? Why aren't you paying another company? So you're actually dividing and having a very different kind of income, and you're not creating a taxable event by putting money in a wealth account. It's like having a huge money market account, is what I would call it, in your capital operating account. So you actually segregate the money without a tax bill, and you're not taking it out. A lot of you, what you do is you take out a distribution. So when you take out a distribution, you make it a taxable event. If you keep it in the company and loan it to another company, it's not a taxable event. So a lot of you just don't know the basics about how to do this. So keep leaning in, learning, be in this channel 5 days a week. We're here all the time. If you have any questions, go to askloral.com, ask a question, make a request, and we'll be back tomorrow.